I wasn't thinking of myself as an investor. For me, it was a hobby. What I would want the most is that Europe takes the opportunity we have today in green transition and help some of those companies to grow, and not just in the hundreds of millions, but into the unicorn stage. We want to bring those solutions where, with the help of AI, you could drive the efficiencies into the system so that you get more yield out of the wind farms or use less energy into the processes which you run anyways. If you bring the digital twin there and the capabilities of optimizing the use without making any compromises into the process, you can immediately drive savings.
Do the software company in climate still have a moat?
I think they do, but not necessarily in the algorithm itself.
Terhi, welcome to the show. I appreciate you taking the time during the drop, and thank you for the drop for having us.
Thank you for having me.
So I guess today I'd love to dive into how software can help in the climate crisis. I'd love to talk through your journey as an angel investor, as a fund manager now. I think I want to explore how you assess climate companies and software. How does that help in the transition? There's a lot within this. I also think at the end we might talk about AI and climate. I think we can't do a podcast and not talk about AI. But does that sound like a great agenda to you?
That sounds great. Let's go for it.
This episode is brought to you by Accelerating Impact, a non-profit that drives impact finance by running free accelerator program to support emerging impact managers. By joining them, you will get coaching, training, financial support, and access to a strong community of emerging managers. Sign up at the link in the description, and thank you to Accelerating Impact for supporting this episode.
Terhi, so you worked 15 years in Nokia before, and then you started angel investing. You were not a professional investor, you didn't have a finance background particularly. How did you start, and what were you looking for at the time?
So actually, I always wanted to be a founder. So when I was still studying electrical engineering, so I saw this great role model of climate tech founders who were building a company which became a billion-dollar company and exited and all that. So seeing the founders work inspired me, and actually the Nokia journey for me was since all of those founders in that company were super experienced ABB guys. So I thought that if I want to found my own company, I need to be like them. So build up that world-class know-how on something. And coming from Finland, so Nokia was the brightest. And then after that, I actually founded my own company. So became the founder CEO. And through that process, I learned a lot of things. So a lot of things I could have done faster and better and, all these kind of things. So for me, the angel investing really was like, I'll share some of that so that the others can do it better and faster and all that. So that was the main argument. I wasn't thinking of myself as an investor. So it was, for me, it was a hobby. And I wanted to work with great people, and I wanted to contribute and bring my own little things. And then kind of a coincidence that led into me becoming a professional investor.
Yeah, and I think just going back to angel investing first, I think what I find interesting when people do angel investing is that it's a different approach to investment, because you maybe do it more with the heart, because you have less of, like, you have no people to report to. It's just your own money. So if you lose it, that's your problem. What were the type of people in companies that you looked at as an angel investor? And do you think that still holds true today? Do you still look for the same criteria to invest?
I think the criteria as such is still the same. But of course, now I'm responsible for other people's money. So it is a major difference. So when you're doing something which, you can make the bets, you believe in this opportunity, you want to kind of participate in it, you believe in these guys. So you can just go ahead. So it's your decision, your loss if that happens. But when you're dealing with other people's money, you have that responsibility for looking after the returns. So of course, then you focus. You can't jump. So you do the diligence, and you want to be like doing all the analysis so that you're not just getting excited. Or in some cases, my angel investing, I wanted to learn. So it was a cool area I wanted to learn from, and therefore I invested. So now I invest with a little bit of different set, but in terms of people, I would say that it's still the same.
Does it mean that you take less risk as a VC?
I think we take a little bit less risk. So angel investment normally goes into one phase earlier. So you basically have a great idea, great people, but not necessarily much more. So these days we tend to look for having some sort of traction and some sort of first version of the product. So from that sense, you could say it's less risky. But of course, it's still in the early phase of the company's journey. So there is still a risk involved, but at least you know that it's not just that it's logically appealing story, but there's at least some people who are willing to pay for it.
And I was talking to an angel investor that became a VC later the other day at a conference, and he told me that his angel portfolio is performing much better than the VC portfolio. And he said because the reason is uh, because he's able as an angel investor to go early and also to just go for it, even if it's super risky. Because the worst things that can happen is he loses his money. Do you think that will also be the case for you? When you look at your portfolio of, like, I think around 20 investment as an angel, and now looking at the VC firm, do you think there will be a difference in performance because you take less risk?
It depends on how you look at the performance. So if you look at it as a multiple, of course it is, because you do take the higher risk, you take the earlier phase, the company is cheaper. With a smaller amount of money, you can get a bigger share of the company. So from that logic, yes. But then on the other side, it's the if you at the end look at how much are you returning in total in terms of money. So of course, you need to balance that out as well. So looking at it from that perspective, and then if you look at the VC phase, so anyways, we are talking about very high multiples in terms of returns.
Yeah, and I think also the difference is that the IRR on an angel, you don't really care about the timeline, really. I mean, you
Yeah,
might care a little bit, but there is no specific phase where, like, after 10 years, you have to have sold everything. Otherwise,
exactly.
you have to ask for your LPs. Well, very interesting. I think what I would love to explore very quickly is how did you manage to raise a 70 million fund as a first-time fund manager with a climate software thesis as well? Um, when you started with this idea of a fund, what was the first step, and how did you convince people to invest in Greencode?
So I think the key is that we are not first-time investors. So the fund is the number one for Greencode, but we as a team, we've been investing in this very same area, exactly with the same focus, with the same thesis already in the past, with very good returns. So then when you look at that perspective, that of course is important, and it plays a role. This is a business which is kind of funny. If you look at any other investment or finance, people say that the past history is not the guarantee of the future, but it does play a role in the VC, especially when talking about the risky category like the VC.
And I guess a lot of people today are struggling to raise money for climate funds. What would you say has changed since you've raised your fund? And I guess how hard was it for you as well to raise a fund?
I think we knew it in advance. So we knew that this is the worst time ever to start a new fund. So that was not a surprise for us. So we had planned in. And of course, when you go into that kind of a situation well prepared, it goes into, you think of what it takes to win in that kind of environment. And what it takes is having a team which is exceptional. So it's a really, really strong team. And then, yeah, you need need to have that background experience in this field, and you also need to be able to show some of the wins what you have done in the past. So we had all the ticks in the place, and then of course I think our anchor investor, so coming with the biggest ticket they've ever given to anybody with us. So of course that worked as a quality stamp that we are worthy of that kind of investments.
And who are they, and why do you think they invested? What was they were receptive to, I guess? Like, what were the arguments that you showed them that convinced them to invest? And also, what the size of the ticket? I don't know if you can share that, but
So the anchor investor is Tessi, so the Finnish sovereign wealth fund, and I think they do a really diligent job. So they were going exactly through all the details. Like colleague of mine, who is actually a super senior person, she said that very rarely she gets that much of the reference calls being done as they had done. So they really did that work in a super professional way, and also we learned a lot from them. So I think they were also working with us in a way that like sparring us, and we could say like, okay, look, here's this thing, we don't know how to address it. So I think we had that kind of a transparency and also sparring in the discussions, which I really appreciated.
and what were the type of questions they were asking to you?
They were asking a lot of course, the fund size, the questions of the structure of the fund, but also on the thesis, team building. So, what kind of team are we? How are we building it forward? And what's the kind of a long-term view on how we want to develop us, not just as a first fund, but as a platform or as a company. So what's our plan there? And then of course, like going through some of the details on our track and looking at that and evaluating those and talking to the founders, I suppose. And I don't know exactly what they did, but they did a lot of work. So
It's funny enough, I'm talking to Tessie tomorrow for a podcast, so I might ask them the same questions. But no, it's quite inspiring, and I think it gives hope maybe for a lot of fund managers these days that are trying to raise funds as first-time managers. Some of them have great angel investing background, great knowledge as funders, but they're still struggling. And I think it's maybe the takeaway here is like, if you find a great investor that believes in you and write a large check, then it convinces everyone else, right? Because I believe, was it the case for you? Have you seen a switch in how LPs responded to you before and after Tessie committed?
Actually, we didn't fundraise before, so we were quite diligent in terms of how to go into fundraise. So we started fundraising with the others after we had secured the ticket from Tessie, and that of course I think it was catalytic. So instead of starting from zero, we could start from that, and therefore of course that helps a lot in terms of going to the others. So like somebody believes in you, and then also after that, so the first private investor which we got, or two of them, were very credible ones, and especially the other one who actually doesn't even have the emerging manager mandate, but they were looking at us as a team and our track and considered that you are exactly in that kind of category what we are investing in, and committed the tickets. So I think these kind of little things in the beginning had a major catalytic effect for us.
Well, let's talk about your thesis as well a little more. So what is exactly your thesis? What's your vision of the world that you actually sold to the LPs, but also to the startups that you're looking at? Obviously, you're investing in software for climate, but what does that mean exactly? So maybe tell me a few words about how you came up with that thesis specifically and why you believe that's the best way or one of the best way to address the climate crisis.
I think it's a long story. So there are multiple things. So I'm an electrical engineer. So I remember when I started what I started to study, that was about, studying in the physics class where you have like wind farms being taught what they are. And I was like, wow, you can make energy out of thin air. I want to do something like that. So there is this aspiration of building up with the support of tech on those issues of the real world crisis, you could say. So I think that has been for a long time. But I think the other one was the previous work for like I built Helen Ventures for Helen, which is a digital energy focused fund, And then Ines, she built one of the managing partners of Future Energy Ventures, so previously Eon. So then also focusing on digital energy. So the thesis, what we believed in, we actually didn't need to change it. So we already knew how it works, and then also where do you find, we had the kind of a visibility into the deal flow, and we knew what we want to focus on. So in a sense, it was an easy process for us to define the strategy there, where we wanted to kind of focus on and what we believe in.
And so, just to summarize very briefly, but what is a check size, stage at which you're investing, type of companies?
So we invest in European early stage startups which focus on digital solutions for green transition. So that could be hardware enabled, but not the heavy plant building type of hardware. So it would be mainly solutions like using the power of AI into solving the issues on energy, mobility, built environment, and heavy industrial sectors. Nowadays, also we start to see a lot of AI itself becoming fifth of the dirty sectors, and therefore looking for solutions for decarbonization efficiencies, resource efficiencies, energy efficiencies, and so forth.
Interesting. I guess, so before talking about the companies that you're looking at and how you're looking at them, there's something interesting for me, which is a lot of people in the climate world, as you know, talk about the fact that you can't really solve the climate crisis with software because it's digital, and we need the actual, as you said, the wind farms, for example, and we need the solar panels, and we need the new plants to produce green steel or whatever. What do you say to these people, and why do you think that the capital light software approach is also a good approach and should be considered as part of the solution?
I think you need both. So I'm the first person to say that somebody ought to invest in those solutions, because otherwise it's not going to be sufficient. But the challenge, we've been investing in hardware in clean tech, and then thinking of the time frames you need to deal with when building up, getting the environmental permits and building permits, and building the first of a kind factory, and then trying to scale it up and all that. So it easily takes decades. So not just one, multiple. And in order to get a massive a takeoff, and therefore a massive impact. So then the question, like a colleague of mine, guys, was saying, like, so what do we? So all of those investments, there are a lot of big corporates doing a lot of investments, deciding to go into net zero and committing into that, and they have billion-dollar programs and so forth. But the question of what can we do now? So if those are ready in 10 years, 20 years or something, or even more, are we just sitting on our laps and do nothing? So that question is what we want to address. So we want to bring those solutions where, with the help of power of AI, for example, you could drive the efficiencies into the system so that you get more yield out of the wind farms, or you use less energy into the processes which you run anyways, and therefore you directly reduce the not just the use of the resources, but also the CO2 in many cases, and through that you drive the effect and the impact and the capability to scale it largely this winter or this summer instead of next decade or something.
Do you think there's a faster timeline from a financial return, but also impact return perspective on software than on hardware?
I definitely believe that. I think that you have, of course, you need both, as I said, but in order to scale something that is just simpler when you don't need to take the physical world requirements or build-ups into account in order to drive it into mass market and into wide use. So that I do believe that actually you create a bigger impact faster. Essentially, of course, you need the stepwise impact also, which might take longer. So you need both, but faster and in a short while. I believe even so that the software could be driving bigger impact in the short while.
And is the order of magnitude as large? Because you might say, okay, it's faster, but maybe the return is also smaller. And I'm talking financial there, but maybe the return on software will be smaller than the one that wins on the large hardware projects. Is that your perspective as well?
I think the actual impact can be also, in many cases, bigger. So if you think about the efficiencies, for example, so many of the industrial solutions are built where you use heavy energy consumption industries. So actually, you might have out of your OpEx 30%, which is just the electricity. And all of those processes are overdimensioned because you don't want to run into the situation that you would need to, shut down or slow down your production because of the fact that you don't have the energy or electricity there sufficiently. So therefore, if you bring the digital twin there and the capabilities of optimizing the use without making any compromises into the process, you can immediately drive savings, which are like worth a huge amount of money. So we saw that actually happening in Europe when the Ukrainian war started and there was a shortage of gas. So the capabilities of the corporates to be able to reduce the use of energy was actually happened in a very short time, and there was no compromise on the processes themselves. So that kind of things can happen in a big magnitude.
That makes a lot of sense. I guess if we focus a bit more at the company level, do you have examples? Like, what does that look like? Software for climate, and I guess maybe at which layer of the software do we play, right? Like maybe if we think about AI, for example, do you play at the model layer? Do you play at the SaaS layer? Do you play at the infrastructure level? Like, where do you play in that value chain?
And so we quite often, of course, the easy answer is the vertical AI. So you would like look at the solution for a particular use case in a particular sector. So that's an easy answer. But I think these days, as we already discussed, so AI itself is becoming the fifth dirty sector, as I say it. So there you need to look at all the layers. So starting from chips, the data centers, obviously, but then also how do you build the code? How do you train the code? Edge computing capabilities related to how you test an interference, and all of those things related to, you could say, more or less the entire stack. We don't invest in semiconductors, so that would be out of our scope. But of course, you have basically the whole stack there as well.
Yeah, that's for sure. I think people might not realize how much of an impact there is on like training AI and building the chips and the energy
Yeah,
required for it. And I think there are just smarter way of coding
yeah,
basically and
yeah.
running those processes for sure.
Yeah, because
Um,
we haven't needed to do that. So electricity has is a consideration that you just get it, and if you look at the kind of what's happening now with the growth of AI, you actually might run out. Like we thought that the electricity is going to be abundant and very very cheap, but what if it goes the other way around? So it's going to be a limiting factor and actually not that cheap anymore. So that actually changes the considerations. But so far, the focus has always been on the performance of the AI. So you haven't needed to think about the
Not yet.
efficiency, not yet.
Not yet for sure. Yeah, it might come in a few years' time.
I would say so.
Well, hopefully our friends at the hardware climate investors will find something to solve for that. Uh,
Exactly.
I guess if we look at the companies, what is the type of profile you look for? And I mean, do you have like criteria on margins, for example? Do you have criteria on uh, growth in the last few years of revenue? Or like, is there something there that if a company or an investor is listening to you right now would consider as part of the investments in software for climate?
So we invest in seed to Series A plus, and they are basically what we would like to see is that first of all, of course, the product, you have a product, some sort of product, even though of course you have a roadmap or a need to develop and further develop. You have the some paying customers, so it could be small still, but at least somebody is paying for using it. And in terms of the other criteria, so it typically goes into traction is one element, but of course it's always better to ride in a big market which is rapidly growing. So you can build companies in the shrinking markets as well, which are great. But it's easier, I would say, to build in the rapidly growing markets, and the size of the market, which needs to be in $1 billion. So it needs to be big enough. It could be that it's still a niche, but it's rapidly growing. So that's of course sometimes the bet we are taking, that we believe is going to be huge, and then the team. So obviously all the VCs say the team. So some people are just better at building up value than others, and it is a rare combination what you need to have as a founder. So you need to be super smart, super good at executing. Your clock speed needs to be extremely good. You need to have the ambition to change the world, and then figure out step by step how to do it. So so there is of course a rare combination. Sometimes you do it as a team, so it's not just one person, and many times we actually want to back the team rather than one person. But that of course we pay a lot of attention to that.
And how much risk do you say, like, where is the risk in this value chain when we think about investing in software? So, um, you know, part of me is thinking that with the abundance of AI tools to code today, maybe the software is not so defensible anymore, and maybe the execution matter much more than the tool itself. Where do you think you're taking risk today?
I think that you can also win on execution game. We have a lot of people who have managed to do that, but it's easier if you have something where you can build a moat around. So that obviously makes your life easier. There are multiple ways of doing that. So how you build the moat and where the moat comes from, but preferably you have both.
Is it still, according to you, the software company in climate still have a moat?
I think they do, but not necessarily in the algorithm itself. So for example, energy flexibility markets. So building up the algorithm to optimize energy use in different use cases. Well, you more or less have a company or multiple companies in most of the countries in Europe coming up with the same idea, because it's an obvious need when you start to have more renewables in the mix. So the flexibility and the need of managing that becomes an issue. But the AI is actually, your AI is as good as your alpha at a given time. So if somebody else's alpha is better than yours, you might lose out. So you better build something else in addition to that in order to really build a large company in that kind of space, for example.
So that means that basically what's defensible yet there is your integration with. I'm thinking about flexibility, right? Like you have to integrate the product with the grid. Like it's not just the software, because it cannot run without being integrated on the grid. So would you say that basically on that case specifically, your defensibility comes from the fact that you have partnerships with grid managers, DSOs, TSOs, and whatnot, and that you're further down the line? So basically, the first one wins. Is that the case?
I think there are multiple ways to build the moat in that particular question. So that could be one. The other strategy could be vertical integration. The other one could be building up the tools to integrate and optimize the processes of integration, APIs, and so forth. So you could become an API company there in that space. So I think there are multiple others as well, but jury is still out, figuring out and how the market will pan out.
For sure. And going back to the question I had on margins, would you say that, like, what's the type of margins that you're expecting from these companies as when you're investing, but also the projection for the future? Because obviously, SaaS companies have had a wild run with like 70%, 80% margins, right? Is that the range that we should expect also in climate software? And where do they stand when you invest in the companies?
So I think that when you're dealing with the software business model, the logic of the business model still holds. But then, of course, not all companies are B2B SaaS. So of course you have other business models also, and you might have, like we've invested in a satellite tech downstream data company. So it's a very different business model because you're actually building on satellite data imaging. So you have the acquisition cost there, or you could have some hardware elements also, which could be sensors or could be even in the case of robotics. So you might have the main brains of the system is obviously in the software, but you might need, in order to bring it into the market, you might want to take a service model. And then you kind of go into building up that also hardware, integrated software, and manage the whole system. So there, of course, you have completely different kind of compared to B2B SaaS. So it's a business model dependent. We are not business model. So we are kind of business model agnostic as such. So we think that there are multiple ways, and in many cases in climate tech, when you say software, you can't completely focus on B2B SaaS, but it might actually make sense to look at those hardware-enabled business models as well, and we've done that.
Would you have examples of hardware companies or hardware-enabled companies that you've invested in before? And what's your view on hardware in that case? Because you're not specifically investing in hardware most of the time. So, you must have also a point of view on are they going to be able to produce the hardware?
So the particular company we invested out of this fund, a company called Lumoview, is using this kind of a hardware which they have built. They have super experienced guys, technically in a Aachen University grads and that kind of know-how, built the tech which enables you to come into any room and to be able to 3D map it immediately. So with that, you have the business model where you have a piece of hardware, which is part of the service offering, what they have. But the service offering, of course, what the customers want is those images and the capability to use them in your renovation projects or energy, renovation or whatnot. So it plays a role, but then also, I think there are like variants whether you would actually sell it, or in this case, if you go a little bit broader. So you could have the case, for example, in my previous portfolio company where they did operating system for charging points, and that OS was it was easier to sell as a controller unit. So you package it into the controller units, and then your customers can just take it like that and plug it on in their charge points, which they are building up, and then whoop, you have the capabilities and the smartness of the smart charging in the product what they are enabling and selling to their customers. So then you need to think about the value chain of the hardware. So that we do accept. So that's still something what we can do. And as said, we've invested in hardware. So what we would not do is those business models which are dependent on you to build first a factory, first of a kind, and then after you've done all that, maybe you get some revenue. So that kind of risk we wouldn't take.
Does that scare you when you see a hardware-enabled software because they have more risk inherent to the company, which means you need to be able to deliver those two products, make sure they work well together, and also make sure that the overall service offering at the end is great. Whereas on the software side, you know what you're building, and I think with the skills of, first of all, AI and developers that we have today, you're pretty sure that if they're going to put a lot of efforts into building something, they'll be able to deliver that thing, right, on the software point of view. So are you scared of hardware-enabled companies?
A little bit. So honest answer, I've seen that how difficult it is.
Yeah.
So there are this you could run up into supply constraints. You could run up into maybe you don't get a component and therefore you need to redesign the board in order to be able to ship your product. So you have these issues. You would need to consider things like retrofits. What happens? Can you afford it? So there are many of those things which are harder. But then, as said, we focus on those companies, for example, where you can take off-the-shelf capabilities, or you work on the shoulders of some other player, so that you're not taking the full 100% risk.
That makes a lot of sense. I guess we're getting towards this interview because I have to let you go afterwards. But a few questions that I wanted to explore, and I'll ask you to be very quick. But one of the questions I had for you today is what are the key patterns or traits that you see in great climate SaaS founders or like climate software founders um, from where you sit, which is like you have invested in a lot of climate software company.
Mm. So as I described earlier, you have these personal characteristics, but in addition to that, I think the two things stand out. So one, you actually truly have a passion for solving the issue. So building up, I think it goes to any of the startups, but especially in our field. So if you really care about the problem and you want to do your piece to kind of solve that and make it better, that carries you a lot when you're going through those tough times. So I think that's very important. And I think also the other thing which goes into our, like if you think about energy tech or something or industrial tech, it's actually quite technically complex. So many times in order to be able to figure out what the real customer problem is, you need to have experience working in the industry. So at least some of the founding teams should have that, and that could also lead into understanding better what the real issue is so that you can tackle it in the right way.
That makes a lot of sense. And I guess as a follow-up question on that, we often say that in VC, most of the startups that fail on execution, where like the idea was great, the team was great, but they failed to execute.
Yeah.
What's traps in climate software that you've seen most people, fall into, basically?
Since we invest in the intersection of AI and climate, there have been both quite a lot of buzz around these areas. So one of the issues we've seen is that you still have the same underlying factors. The industries are still the old conservative, slow-moving industries. Once you win them, you might win really big and therefore have very profitable long-term relationships with the big customer values. But then the process of getting there is not the easiest, and many times that kind of how do you go from getting say energy utility excited, and then they pilot it, and then they are in this piloting limbo. How do you get out of that and get into the commercialization so that they actually start using it? And many times as a startup, you think that you're solving something super important, but if you look at it from the customer's perspective, it's just a one-point solution. So even though you could have millions of effect for the customer, but if the customer is having billions of capabilities, so is it big enough that it moves the needle on the customer side? You need to consider that you actually solve the meaningful problems for the customer so that they care. So some of those issues I've seen like been problems.
Yeah, so that's why you want to have someone from the industry as part of the team, and
Yeah.
ideally also someone that's a good seller, or at least that convince people
Yeah,
properly.
exactly.
Uh,
Talks the customer language as well, so understands what the issues they are dealing and how they address those.
That makes a lot of sense. Well, maybe a few questions before we get to the end of this interview, but where are, according to you, the next big climate unicorns in software, or like 100x opportunities, as we say in software? Like, what do you think that is today?
I think that is a question which is difficult to answer. So if you look at the climate and the software, so I think one of the areas we are the most interested and bullish about at this stage, obviously the energy tech. So the kind of a energy being the, or especially the electricity being the underlying factor to everything, including the AI itself. So I think that area certainly, since that's going to be I believe, scaling in such a rapid pace. So I think that area we are particularly interested in at the moment. And then also I think part of the kind of, as we discussed about looking at the area we are dealing with, so this kind of industrial customer base. So I think also building up the portfolio construction for climate tech is a little different than building up typical AI. So enterprise matters. So how you go into the deal, you need to have hedging the opportunities as well in order to provide what you ultimately are doing, investing on behalf of others. So that goes into, again, diligence. And sometimes, like, even though you have a great company, but if the valuation is crazy, you walk out.
Would you work out on valuation?
Yes, I
A lot
would.
of VCs that says that they don't care because if the company
Exactly.
is good enough, so you
Yeah,
would, right?
I would.
Right.
So in our industry, I think you need to think of that portfolio construction slightly differently.
Interesting. Well, one last question for you today. Actually, a couple of questions. First of all, what does success look like for Greencode? In 10 years from now, you're successful, you're happy. What does that look like?
So what I would want the most is that the Europe takes the opportunity we have today in green transition and especially in our case at the intersection of digital. And I think all the opportunities now granted on Europe to kind of build the company's great stories. We have a lot of industry heritage, so we have a lot of attitude towards green in the society, and we have very good support structures also regulatory-wise and all that. So people are complaining about regulatory, but I think many times looking at the capability to build companies in our area are never stronger than they are today in Europe. And of course, what I would like to say is that we help some of those companies to grow, and not just in the hundreds of millions, but into the unicorn stage, as we said.
For sure. Well, I would say go, go, go Europe.
Exactly.
Well, if people want to find you online, if they want to reach out as co-investors, as LPs, as startups, what's the best way?
LinkedIn, that's the fastest way. And then on our website, if you're a startup looking at this, so we'd love to see your pitch. So that provides the instructions how to get in touch with us.
For sure. And I think my email is also available. I can do introduction to Terhi if needed. Well, thank you so much for today. I learned a lot from you on how to invest properly in climate software. I think it was inspiring also from your journey, going from corporate to angel investing, funding a company in the meantime, raising a large fund. And listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify. Thank you so much, Terhi.
Thank you so much. Pleasure.